Well, good morning, everybody. Welcome to Real Estate Matters. For over 11 years, the voice of real estate in Flagler County in Palm Coast, Florida. This is the quiet side of Florida, and I'm Toby Tobin. I'm the publisher of GoToby.com. I contribute to the Palm Coast Observer. I'm a Florida licensed realtor with Grand Living Realty. Co-host Anna Maria Long is with me in the studio today, along with guest Tony Amaral Jr. from Amaral Homes and Pools, member of the Home Builders Association, which is where Anna Maria works. And they're also one of our sponsors on the show. Our lead sponsor is Veranda Bay. Veranda Bay is a private developing community of lots and luxury homes on the Intercoastal Waterway with a Flagler Beach address, featuring custom homes by Olson Homes, AR Homes by Arthur Ruttenberg, ICI Homes, and Holbert Homes. And 2 new sections have opened up for Toll Brothers and Dreamfinders. Check them out, please, at verandabay.com. We're also sponsored by Hammock Community Church, where you find me every Sunday morning at the 11 o'clock service. Come visit us. If you're more of an early riser than I am, there's also a 9 o'clock service. It's on A1A, mile and a half north of the toll bridge. So let's go over some quick stats before we get to Tony and our main topic, which is it's kind of the end of the year, so it's the time when we start looking forward into the next year to guess, because nobody knows, but we'll have our predictions on what's going to happen next year. So far this December, and we're recording this on the 18th, Thursday afternoon. These numbers are as of the 18th. 142 single-family homes have been reported sold through the Flagler MLS at a surprising median price of $395,000. We've been running in the 365 range for several months. Now, last December, there were a total of 230 homes sold at 355. So 355 up to 395, that's a pretty healthy jump. Mm-hmm. Days on market, 78 so far this month. As usual, we will follow the 250 and below market and the over the $1 million market. The 250 and below, there are 4 sold, only 1 for cash. 9 days on market for those 4. The $1 million plus and higher, and I think we're going to get towards the answer to the question of why the median prices are higher. There have been 12 homes reported sold in the $1 million plus range. 11 of those 12 sold for cash. Days on market,
must be nice.
10.
Wow.
And 3 of the homes, the day on market was listed at 0, which means that they went under contract on day 1. Wow. That's pretty amazing.
Yeah, I'd say so.
There are 1,172 homes listed, 322 pending. That's a 5.8 months of inventory in the listing file. The median price of the pending homes, $372,500. So, what do you think of the high end of the market? I mean, one of the questions I was going to ask later in the show when we were talking about what's happening or what do we think is going to happen next year is, are you noticing a wealth effect? And I think the high end of the market is really going to be driving the market and overall pricing next year. What are your thoughts?
I think so. I mean, we're starting to see that influx. You've got the high end just announced a couple months ago. Of course, I can't remember what it is right now, but they're going to be on the beach side. They're going to be doing luxury townhouse apartment type deals.
Oh, Ritz-Carlton.
Ritz-Carlton, that's the one, yes.
2 towers out in Hammock Dunes.
It always amazes me from being here for so long that what's driving this area to have that. but there's coming and they like it. It's location. You're on the beach. You've got the intercoastal waterway. You've got plenty of value added to you purchasing the lots by having those amenities right next to you. So I think that is a market that kind of drives. And the hammock area even has a lot of vacant land. So you have that access directly onto the water, and those prices are going to be going up and up. So I think that's a drive.
Even the development within the Hammock Dunes Community Development District, there's, I would guess, at least 25% of the lots are still available. They're undeveloped. I mean, they're water and sewer, all ready to build.
Yeah.
But they're vacant lots. So I think that's going to drive. Another thing I've noticed is that a couple of years ago, literally 99% of the $1 million homes were beachside.
Yeah.
Mm-hmm.
And now that price tag has gone over into...
It's moved west.
Yeah, the Lambert and Grand Haven, the Conservatory are showing Palm Coast Plantation.
Yeah.
Even, and Plantation Bay.
Do you guys think we're going to continue to have people coming in cash heavy from other parts of the country?
I do. What do you think, Tony?
I've seen over the last couple of years, you kind of it's more of the financing seems to be less of an issue for everybody. They just come in and say, I'm ready. They've sold something. I've heard it's that boomers are cashing out. They're getting to the point where they're selling businesses, they're selling houses, and they're going to their homes now to retire. So I think they are cash heavy, and they're just saying, "Hey, this is what I want," and they're putting their money where their mouth is and saying, "I'll take it."
It's still really interesting to me that they're putting all of their money in the house rather than some people finance even just to not have their money tied up in the house. I guess they could always
I think
finance later.
The market is people are diversifying. They've accumulated so much wealth in their business that they may have just sold, or in the stock market, that it was time to diversify. And real estate is almost always considered a safe investment. And I think that everybody that's got millions of dollars doesn't want to live in South Beach.
Yeah.
Especially
Especially if you're, to Tony's point, retiring and like the boomers retiring and wanting the quiet side of Florida. You don't want the nightlife and the loudness. You want something calm and tranquil. We want a place that your younger family can come visit and still have it be family friendly, things to do, parks to visit. And we have all of that here.
Yeah, we're unique, and I think, I've been lately using the phrase "the quiet side of Florida," and I didn't make that up. That was floated around several years ago as being a tagline for I think maybe it was even the Tourism Development Council, but they nixed it because they thought it sounded too
too sleepy,
too blah.
I do believe too. I think to the point of the quiet side. I think that the people who are here have been in that noise. They've been in that traffic. They've been in that high density, if you will. And they're just saying, you know what? It's a beautiful place. It's quiet. It's, I'm close to Jacksonville. I'm close to Orlando. Why not? I mean, it's pretty much dead center. It's a perfect place to kind of settle in and still have that entertainment.
You have access to it, yeah.
And you have the access
I
to it.
go to Orlando like weekly during MLS soccer season. So I'm down there, but then I get to leave, and that's the best part. So I can go have fun food, have fun, go to entertainment, and then I can come home to here.
Earlier today, I saw a report by Fox Business, and I can't remember his name, but supposedly well-known real estate professional, nationally known, had published an article and listed the 10 cities that he thought were most primed to grow fast this next year, do well. And Jacksonville was one of them. It was the only one in Florida, but we're really part of the Jacksonville market.
we get torn between the two depending on what company it is, essentially, if we're part of their Northeast or their Central Florida region, especially amongst builders. I went to college in Jacksonville. I went to UNF, and then I stayed there for a few years after. I personally love Jacksonville. It's a very unique, diverse city. It's got different sections within it, if you will. You've got Riverside, Beachside, West Side, North Side, and they all have their, and South Side, and they all have their own, and downtown, and they all have their own personalities. And I agree that with that it has great opportunity to grow even more economically. I think the culture there is great, and it has huge potential. And if it does, we will benefit from that in a huge way.
I think you're right. I know my oldest son went to go look at UNF when we were looking at colleges, and just the partnerships they had with businesses around, and it was all, there was no internships that were free. Everything was a paid internship.
Yes.
And they were kind of just listing off companies.
They call it transformational learning.
Yeah. And they're just the company, and you start realizing, like, wow, yeah, Jacksonville kind of has that everything attached to it. You've got the ports, you've got the main interstates. It's an area that's just waiting to grow. It's been that sleepy little, largest town in the United States. And I think I agree that, it definitely has that potential to be that up and coming, even though it's been around forever, but
it's prime for revitalization.
So revitalization, and even just new stuff, because there's just so much opportunity there.
The stadium's being redone because the Jags are going to go play in Orlando for this coming season.
So, yeah.
And so their stadium's being redone again. I think they realized the pool in a football stadium, maybe it's not like the best idea. So they're redoing that again, and that's downtown. So you've got an opportunity for downtown. The downtown sits on the river, and there's entertainment and shopping. I think it's probably time to rethink that a little bit and change it. And there's great big businesses there. So
and to the extent that Orlando is also growing, I mean, we're right stuck exactly in the middle, which means we've had an identity crisis over the years. But
yes, we were 904 once, remember?
We were 904.
Yeah, when I moved here, we were 904.
So was I.
Same.
Folks, we have to take a quick break. Don't go away. We'll be right back. Yep. Well, welcome back, everybody. Thanks for staying with us. This is the second half of Real Estate Matters. We have Tony Emerald, who's a member of the Home Builders Association, as our guest today. And we've been talking about the potential of Palm Coast as a real estate market in Flagler County. And we'll continue that through the second half of the show. This is the time of the year, Tony, when people start making predictions and resolutions too, and they're both going to be equally valid or invalid.
Exactly.
So where do you see our local housing market from a builder perspective headed in the next year?
I think we're kind of seeing that, we saw that strictly sellers market during the pandemic. It's been shifting more towards sellers. And I think this coming year, it'll be more of a balance. You're probably going to see the time stay about the same as far as on market. I believe the prices will rise, not a whole lot, maybe a couple percent, 2-3. If interest rates keep falling, that might change. We're very hot because people are still moving here even today, and that they're people want to say it's crowded and it's crazy, but we're that section that hasn't quite gotten to full potential yet. So I think
if you think it's crowded, drive north to Jacksonville, drive south to Orlando, and then come back and reevaluate.
Yes. You notice though that the people that are complaining, if you go back and look over social media over the last 5 years. 5 years ago, they couldn't wait to get out of here, but they're still here complaining today. They haven't.
They just got here yesterday.
Or they just got here yesterday, right?
So, we'll wait and see. I mean, my New Year's resolution is to be optimistic for the coming year.
Oh, I'm going to hold you to that.
I'm going to be optimistic, and I do see potential for it. It's just a matter of the variables are always going to be there, but I do think we're kind of setting up to be a more balanced market where if you put out a product at a good price, there will be people to buy it, and it's not going to be that kind of, well, it's either all or nothing that we saw on both extremes over the last probably 5 years, where it was, this is my house. If you want it, this is the price. And people said, I'll even give you more than that. And then we had the other end where it was, no, your asking price is X. I'm going to give you 20% less.
Please buy my house.
Yeah, take it or leave it. And people were taking it. So
if you're a builder, you say, well, we'll give you the cabinet upgrades. I'll buy your interest rate down, and you can upgrade your flooring.
Please buy this house. It's already built. I really need to get rid of it.
Not all of us can do that, but we
spec,
always give a good value.
Spec track builders, if they're up, they're like, I cannot keep paying on this thing.
They've got more playroom than your local builders.
Correct.
Last night I called Anna Maria and I gave her a homework assignment.
At 7 p.m.
I said, Anna Maria, call some of the builders and members of the association, and
I delivered.
Yeah, and you delivered.
So
why don't you kind of run down what you found out?
I had a bunch of calls today, and just said, I will not be attributing this to you or your company. So give me the truth. So I don't have names, truly. But I asked them what their housing market predictions for 2026 are. And I started down one path and I ended up on a totally different one. So we started with interest rates. A lot of people do believe they'll be dropping, and that those that could not afford down payment assistance for the first-time home buyers, before when the interest rates drop, they think they're going to go ahead and make their move when they drop just a little bit more. That the starter home to the middle is always going to be the most affected, but as we've been saying, the luxury market's going to stay the same. They're typically not affected, and this person also believes that people are continuing to relocate to Florida with cash in hand. I reached out to a supplier and I got very specific data. Q1 flat to down, Q2 flat, Q3 flat to up, Q4 up minimally. Another builder said slower than what we've seen in the past few years. Larger markets have already been hit, so they will bounce back quicker. We're just starting to feel that. But we don't expect a dead year. It's just going to be different than what we've seen since 2021 when we were basically replacing housing stock. Yes. We ramped up quickly and we're going to have a bit of a break now. And then we'll also be the last to bounce back. That's been historically true. And we should watch larger markets for indicators of our comeback. And then I thought it was really interesting that this person also jumped to 2027 and said that they expect a really strong Q2, Q3 for 2027. I didn't even ask about 2027. I also spoke to a lender because they've got a totally different insight, which Toby, I've got a whole pitch for you on a show for that, for this. I can't even get into all of it. But they believe that small drops are going to, in the interest rates are going to continue to push buyers to move forward, and that the increased inventory in housing could increase sales. She has seen a significant uptick in foreclosures, not necessarily in our market, but just in the lending world.
There has not been in our market because I follow that statistic monthly.
Well, that is really good that we haven't seen it here, but with the debt in the economy slowly creeping in, and I asked, is this going to be a 2008 situation? And they're very confident that no, thanks to improved lending practices. They didn't believe that would happen, but we can't safeguard people from life or financial loss and the cost of living. So I got a whole show pitch that we'll bring on for that. And talked to a spec track builder. They've got new specs coming out. I said, well, talk to me about those. That's a big move. Yeah. For a market that we're talking about in a transitional state. Yeah. So they said the specs are, the square footage remains steady. It's about the same size as before. Everything's comparable, but they are offering more upgrade options. So they're in a spec track, but they're giving you more flexibility. And they're using higher end products to add some value. And they're projecting a little bit higher than this year. They were very low this year. Now, this is the one that got me. And at first I was like, okay, you're the only one thinking this way. But the more they talked, the more I said, oh goodness, you make sense. He told me, artificially, it will be a good year. I said, artificially? Well, hold on. Sit with me. He said the Fed chair is set to change early next year. He believes the interest rates will drop 1 to 1.5% in the first few months. He's noticed that there's been less media coverage of tariffs on the side of them being costly. The media coverage has been different. 2026, November 2026 is the midterms.
Yes, it is.
Hence, artificially a good year. He believes that everything will be done to protect the image of the country right through the midterms.
Well,
I thought that was a really interesting perspective.
It is interesting, but to me, that's not at all surprising. Of course, I've lived through more elections.
This was the last person that I've talked to. So I had talked to everybody else that was all predicting lower. And then I got to this one last. Mostly because he called me back last.
I think my opinion goes along with that next year, and I don't think it's going to be as artificial as that person does. I think it's going to be more real, because tariffs really, I mean, we've had tariffs now from his first term. We had tariffs that are still in place that Biden didn't throw away, and they didn't cause inflation, and they do provide a tremendous amount of revenue.
The comments on the tariffs were more so about the media coverage of it and the kind of the outlook that it gives to public image and what how the public's perceiving the administration. And there was some commentary on the current administration perception. For example, and I didn't personally get to watch it because it was during kid bedtime, but the presidential address the other night, and the demeanor being different, and kind of just noticing a tone change.
Yeah, I think that the first quarter next year, people are going to start to see more money in their tax refunds.
I certainly hope so.
They're going to see less money taken out of their paycheck going forward.
Preach.
And it's going to have a very positive, real effect on the economy. I believe that.
I think so too. I mean, going to the tariffs and everything, I think it's becoming common. Like, we're expecting it. People were freaking out when our interest rates went to 7%, and you look at them and go, do you not remember when you were all excited to have a 7% interest rate?
Yeah,
that's exactly what I meant.
When money was basically free for a long time, you get used to that. So anything above that, you're gonna go the other way. But
it's still not actually high.
In the 70s, it was 14%, I believe.
Well, I hit 17% on an adjustable rate mortgage back in the late 80s.
I had quoted I'd seen an episode of The Golden Girls recently, and Blanche said, "You couldn't pull me out of this home. I have a whatever percent." It was like a 15% interest rate.
And so it's just norms. And so I think as we settle in and we kind of figure out what's going on, I believe that everyone will kind of be more relaxed, as opposed to, well, what's happening. And the unknown always makes people panicky.
Oh, yeah.
Yeah.
So I think
uncertainty is the biggest downer for any market. So we got to wind down now. We're running out of time. But just quickly, in a minute, if you could, what are the biggest challenges for builders going forward next year?
Finding that right market niche, I guess. Do you want to provide those first-time homeowners? Do you want to provide those high-end homeowners? I think that's going to be the kind of the telling of, if you can nail that down, you should have a good year. Good luck.
Have you decided where you're headed?
I'm on both ends, so it's not enough time to go into that in detail right now, but I do look to do both ends on both sides. So I'm excited.
Good. Well, thank you for being here.
My pleasure.
Anna Maria, do you have any final thoughts?
Well,
Before you wrap
I
it up?
always believe that regulatory barriers are the home builder's biggest challenge. And that's why I have a job. So thank you, government.
But you do very well. Thank you.
Thank you, Tony. That's very kind of you.
Next week's show is going to be talking about some information I've just come across. A great report showing how Flagler County stacks up against the other 66 counties in the state of Florida on just about every category that you can think of. So be here. We'll be here. Anna Maria and I will be here next week.
I can't wait.
And you haven't even seen the report yet, so
I really
a lot of surprises in there for you too. So we look forward to having you back next week. Thanks for being with us. I'm Toby Tobin, and I approve this show.